Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. In my last video I spoke about this evening star pattern and I said I was praying that the next trading day, which was Friday, we wouldn't get a choppy day. We would actually get a strong, directional move, possibly showing follow through from this evening star pattern. And my prayers did not get answered. I guess is life, right? Sometimes prayers don't get answered. And what the market gave us here was an inside daily candle setup. All right. Now, keep in mind the evening star pattern, which is usually a bearish reversal pattern, it is not yet invalidated. Just want to point that out. Okay. It would have to clear or close above 454 or 455 to be invalidated, in my opinion, and put higher targets in play. But as of right now, it's still not invalidated. But we still need to check out the next context of the price action. You see, on Friday's candle, the range of that candle is within the range of Thursday's candle. So as many of you guys know, that is an inside daily candle setup. And the way to trade this is pretty straightforward, right? The inside daily candle is usually a sign of consolidation or choppy action, meaning it's building strength for the next trendy move. And we know the trendy move is here or is on the way when we break the range of this candle. We call this the mother candle. So the inside candle is the child candle. This is the mother candle. The range for Monday's price action would need to break both this candle's range and this candle's range. Okay. So this candle's range, Friday's candle's range was 454 to 452. And the mother candle right here was 455 to 451.4. Add those levels to your charts, please. That's the range that the market needs to break to give us the next trendy move. So to put it quite simple, 455, 454 of course. But because of this mother candle here, 455 needs to clear for us to be able to go and test my 456.6 level and possibly up to 458 and 460 for a new 52-week high. It has to break that level based on this setup. All right. Based on this setup of the inside candle, I have to break 455. All right. To be bullish and to cancel the evening star pattern. Now, the bearish setup of this trade would be to break down 451.4, which is also below my 1.618 fib level at 451.7. So, kill two birds with one stone type of thing. So, but overall, if it breaks down 451.4, based on this setup combined with the evening star pattern, that would be a pretty good R&R for a short trade. Not short trade, the puts, getting the shorts. You get what I mean? Bet to the downside, all right? So if that level breaks down, I was short. Targeting 450, 448.7, 447, and possibly the blue trend line at 444.8-ish. Okay, now this was an ascending triangle, so the back test of that will be down to 444. All right, overall still bullish. If we zoom out a little bit, not too much. If we zoom out based on, the last few months, couple of months or last month's price action, above 444 is still overall bullish. So if bears can break that down, then I would be a lot more bearish. I would favor a test down to 436, maybe a little higher than that, but around that range because of the pink trend line from March 13th low. All right. But, one level at a time, one structure at a time, one pattern at a time type of thing. All right, that's how we got to take it. Just like with life, one day at a time. Things will probably eventually get better, one day at a time. So with the market, we want to have that same approach. One level, one trade at a time. Okay? Because if we take on too much, it'll overwhelm us, right? Okay? So let's try to simplify this. This is what Uncle's trying to do, is just try to simplify it because it's a very complicated situation here. Trading is complicating. So what I try to do here is I report the price action. not from a bearish perspective or a bullish perspective, but from an unbiased perspective. That's why I say unbiased price action analysis. Okay, now if the market is bearish, then it's bearish. Okay, I'm gonna sound bearish, but don't think I'm bear biased. I'm just reporting it. I'm more of a weatherman, you know. And if it's bullish, then I'll report it bullish. Right now, I'm seeing an evening star pattern. That's usually a toppy sign. We do have an inside setup here. We just need that confirmation for the breakdown of this fib level and the mother candle's low. All right. So 451.4 breakdown. Look to short with those lower targets in play that I mentioned. Okay. Now I don't think we're gonna get a small move next week. I think next week is gonna be pretty volatile, pretty tradable week if you trade it unbiasedly. We got a lot of economic data coming out. PMI to start us off, consumer confidence, FOMC. That's the big one right there with Powell speaking. I can't wait to talk to you guys about that one. Thursday we got what? GDP. We got about durable goods. PCE would be on Fridays, plus consumer sentiment and stuff like that. So a bunch of reports and some Fed speakers next week. So I think next week is going to be pretty tradable. We're going to get some decent moves. So I implore you guys to know the levels, know the setups, and just trade it unbiasedly. My core trade setups are the false breakouts and false breakdown setup. But sometimes you can you can short straight up when the support break because you have to look at the daily chart. We recaptured 451.7. We cleared that back on July 18th. So if we can break that down Monday or Tuesday, that is technically a false breakout setup and we could go for more downside. Okay, combine that with the inside daily candle setup here and the evening star pattern. To me, it's just a good trade setup, but we gotta wait for the price action to give us the signal, and that is the breakdown of that support level, at least on the 15 to 30 minute chart. If you're gonna go to small time frame, go no lower than the 15. Even the 15-minute chart sometimes is questionable, especially in the 2023 market. It was working great last year and the year before, but this year, I've been leaning more towards the 30-minute chart sometimes. But just, find what works for you. I have some traders, they find success with a 5-minute chart, and some traders trade with a 2-minute chart. I don't know how to do it, but they find success with that. So, just find what works for you, okay? Now, that's SPY, okay? Above 454 and 455, be bullish. Below 451.4, get bearish, okay? Let's try to keep it simple. QQQ. Look at that. Beautiful. The evening star pattern on this one. I mentioned on QQQ that this evening star pattern looked at a lot more bearish than SPY's, and it did show some follow through. It didn't close much lower, but it did close lower. So we have to I think we have to consider that. Now look at this white line that I got here. That's a critical support level, right? Might not be support for much longer, but it's at 375.66, and that's fib levels from all-time high down to October 2022 low. So keep that level in mind, 375.66. If bears can take that level out, holy moly, will it get a lot more bearish for the triple Q. All right, if triple Q is an ETF, this could mean Tesla and Apple and NVDA could be dropping, and we're gonna have some great shorting opportunities. I know a lot of you bears have been waiting for a while, patiently waiting, and are excited. Hey, check out the 20-year seasonality, guys. All right, this is weakness season, seasonal weakness. Okay, keep in mind it's seasonal weakness. I think we'll get a bigger drop out in September, but just be careful to becoming bear buyers. You know how I am. Stay unbiased level to level, okay? But right now, QQQ is looking short-term bearish, okay? Like it wants to pull back some more. And the confirmation for that would need to stay below 375.66. All right? The close was 3 cents below that on Friday. 375.63. That's pretty bearish, but it's not a strong close. That's the problem. It's not a strong close below, but we'll see what happens. Maybe we'll gap down, and if we stay below 375.66, my next target would be 372.8, 369.5, and 367. Okay, overall bearish. I would be bearish below 375.66. Okay, now guys, watch out for those false breakdown setup. That's when we break down support and then recapture it on a later time frame. I got resistant at 377. Bulls, if you are a bull, now that we got the test of these critical support levels, if you're a bull, you want to see 377, 379, 380.5, and 382. Those are my resistant levels. You want to see those levels recaptured, break back above, close back above those, at least on the 15 to 30 minute candle. Obviously, the higher the time frame, the better, especially if it's on the daily chart. Those levels must recapture to be bullish again. All right, you know a low is in, whether it's a higher low or a lower low, but you know a low is in when it bounces from support and recaptures resistant. So unless that happened, not bullish on triple Q right now. Okay, remember, I'm a sheep. Please don't accuse me for being bear biased. I'm just reporting the price action. I'm just a weatherman. All right, I'm just your assistant. Dow Jones, I had people kept requesting Dow Jones, so if I see one or two people request something, I don't, I think about it, but I might not consider it. But then when I see 5, 10 people keep requesting it, I gotta give in. Okay, I gotta give in to the people. So here is the Dow Jones. All right, I have fib level from May 1st down to May 25th low. All right, that's what these pink lines are about. Support, critical support is at 351 with critical resistance at 353 based on the fib level. Above 353, guys, look to long on the Dow Jones. Above 353, look to long on the Dow Jones with 355.7. Let me add another fib level up there. And 359.3-ish below, above that. All right, look to long above 353 with 355.7 and possibly up to 359.7. 359.3, excuse me, my brain farts again. All right. And look to short below 351 with 349, 346.5, and there's a pivot high right here around 345.7-ish. Here is 344.5, pivot high around June 30th. And then the next fib level at 342.5. All right, watch for the break of that range. 351 to 353, watch for the break of that range. IWM, it broke down that 195 level. Finally, I was wondering, is it going to work out or not? Broke down 195. Okay, if you're a bull, you want to see 195 and 196.5 recaptured to trigger more upside, putting 198.5 and 200 back in play. But if you're a bear and IWM stays below 195, look for that breakdown of the next support at 193.8, 192.7, and 191.4. Those are support. Please add them to your charts. And if they break down, 189.2 and 187 are back in play. Okay? Tesla. Oh, Tesla. Tesla, you made my week, Tesla. Sorry, Uncle's getting emotional. It's been an emotional week for Uncle Chartis. But holy moly, we saw the exhaustion gap. Shout out to earnings. I mean, earnings is gonna get the credit. We all know earnings gonna get the credit. It served as a catalyst. But price action analysis helped as well. Okay, why? Because we had an exhaustion gap. Exhaustion gaps are bearish. And then the fall, and then look where it gapped down to. It gapped back below my multi-year trend line. That was a false breakout setup. And then when it opened, I had support at 277, and it broke down support. Holy moly. I mean, the price action was literally screaming at us, saying, be bearish. I think it was probably screaming louder than that. I don't know if anyone heard it. And I pray. Well, my prayers haven't been getting answered lately, so let me not pray. But I do hope you guys caught the move. Now, let's move on to the future, right? Resistant that I have with Tesla is at 263, okay? 263 is resistant with 265. That's his pivot low here back in early July. 265, and then the 78.6 fib levels at 269. Those are my resistant levels, guys. I usually say don't try to catch a falling knife, but if you're going to, let it be from a false breakdown setup. Play it level to level. Okay, the move, it could be a counter trend move at this point because it was so strong of a move to the downside. Okay, but all I'm saying is put the probability into your favor and, you know, wait for that false breakdown setup. So that means we need 263, 265, and 269 to recapture. Okay? To recapture. And that's the bull case. Now support I have is at 259 with the next support below that at 257.5 and then 256 and 254.5 below that. If these support levels fail, guys, don't argue with the price action. The sell-off continues, possibly down to 240.7. We do got a decent sized gap here at 235, 234.7-ish with 232.8 below that. Okay, guys, follow the price action. Here's Apple once again testing that 2023 uptrend line. Can we finally break it down is the question. All right, breakdown level, guys, is at 191. 191 is the level that we must watch for Apple. Apple is a market moving stock. Will we finally get the breakdown? Because if we do, holy moly, hallelujah, bears will probably rejoice. Because if 191 breaks down, in my opinion, bears take control. We finally got a breakdown of this trend line, and that will put 188.4, 186.5, and 182.3-ish in play, possibly even lower than that. Now, we've been getting bounces here. I trust bounces from support when it clears of resistance. So if support's at 191, I have resisted. I have a couple resistance at 192.5 and 194. 192.5 and 194 are my resistance level. I will trust this bounce if those level recapture, put in 196, 198, 200, and 202 in play. If the bull case plays out, guys, just trade it unbiasedly and let's make our money. If you're not happy that the market didn't go down how you want, at least you can look at your P&L and find some happiness there. I think that would be more important. Okay, guys? So below 191, bears take control. If it bounce here and resistance clear 192.5 and 194, guess what? It's going to go up higher. Okay, guys? So good luck with what you choose to do. But I hope you guys choose just to unbiasedly follow the price action. Now here is NVDA. 1 hour chart here. All these blue lines are my fib levels. But yeah, big triangle pattern here, guys. And it tested support. Breakdown is 444. If 444 breaks down, that's bearish. With 440 in play, if 440 breaks down, that's bearish. We got 436, 434 in route first. But 431.5 is a fib level. Followed by 428 and 425 below that. I'm telling you, if we break down 444 and 440, we could get a pretty nice move to the downside based on this big old triangle pattern. Now, if it bounces off support, I will trust it only if it recaptures 449. I will long above 449 with 445 in play. And if that clears, bullish with 457. Excuse me, not 445, 455. All right, if 449 recaptures, 455 would be in play with 457, 459.4-ish, 464, 467, and then 470 in play above that. All right, above 449, look too long. Below 444 and 440, look too short. Netflix, wow, Netflix with the big drop. Shout out to earnings. Big critical support level. The next one is at 426.4. If that fails, guys, we're going to drop some more. 423 would be my next support level with 415.3. 411. There's a gap around 411. Oh, actually 408. The gap's around 408. And then 401.6 below that. Netflix is a volatile stock, so be careful trading this stock. But it's amazing. Now, if you're bullish, you want to see resistant recapture at 432, 437.5. If that happens, 445, 450, 445, 448, 450, and 453.8.4, 453.4 would be back in play. Okay, guys. Amazon. Wow, Amazon bounced off of that support level of the white trend line. Holy moly, around 128.5-ish. Closed right on my 130 level. Amazing. It's just, come on. All right. So let's try to keep it simple from here, because Amazon could do anything right now. It could bounce back up to fill this channel, or it could break it down and get real bearish real quick. So we got to know the levels, know the setups, and just trade it. 128 is support. If that breaks down, look to short. Holy moly, that rhymed. 127, 124, and 120 would still be in play, okay? Now, if we bounce from here, I have resistance at 131.5. If that recaptures, 132.5, 134.3 would be back in play, and then top of the channel would be back to 138. Play it unbiasedly. Amazon is not too bad of a stock. Could get some decent moves. Google. Here is Google. I have resistance at 121 and support at 119. Please watch for the break of this range. Above 121, look to long with 122.6, 124.3, 125.8, 127, and 129.5 above that. If 119 fails, 117.7, 115.8, possibly down to 113.4-ish would be in play, okay? All right? Above 121, bullish. Below 121, 119, bearish. All right? Let me bring the VIX back. I haven't spoken about the VIX. Not much going on with the VIX. Above 14, I would be bullish. Below 13.3, I would be bearish. Right now, the VIX is chopping. Don't know what it wants to do. Watch those levels, okay? Above 14, put 15.5 in play and 16.7. Below 13.3 puts 12.6, 11.9, and 10.9 in play below. All right, guys? Here is the dog pool order. For Friday, we have 1.6 billion in premium at 452.18 and 1.6 billion in premium at 452.14. We had 2.6 billion in premium at 452.29. So around that 452 level, guys, that's where there's activity from institutions. All right? There's a lot of ways you can interpret dog pool order, but with me, I just like to simplify things from a price action perspective. Above 452.29, bullish. Below it, bearish. Okay? And that's around where SPY closed too. That's the interesting part. So watch out for any gap ups or gap downs, guys. If it gap down, then you know that's freaking bearish. If it gaps up, then, well, that's bullish. Here is the SPY filter for 500K premiums or above. Freaking Cheddar Flow changed their, their, whatever you call this. The way it looks. I'm not a big computer guy, guys. This is the show that got me confused. All right, here it is. We'll look at, so this is the 27th. We'll look at expirations date 1 month out, up to August 18th. Yeah, they changed their layout. Yeah, that's the word, layout, right? They changed their layout. Confused me a little bit. But yeah, overall bearish, over 600, 600K? See, it got me confused, guys. But I'll tell you this, it's overall bearish for the short term. QQQ, bullish for the short term. IWM, bearish for the short term. Dow Jones, nothing. Tesla, bearish for the short. Wait, hold up. How? 51% in the call. Okay, so it's bullish for the short term, but it's I mean, we look at the context here. Sweep orders are for puts. Block order for calls. The puts are more aggressive. All right. The puts are more aggressive on Tesla. Here's Apple. I spell Apple right. Nothing. NVDA. Okay, so it's bearish for the short term. Amazon. Bullish for the short term. VIX. Nothing for the short term. Netflix. Nothing for the short term. Did I miss anything? All right, guys. Wait, Google. Google? Google? Yeah, nothing for the short term for Google, guys. All right, thank you guys so much for watching. Good luck this week. Peace.